Okay, Peter. Thank you for your patience. I'm unmuting you right now. How are you, Peter? It's a pleasure to meet you. You'll have to turn on your mic. It's a drop-down menu on top because you are unmuted.
Make sure to, next to the mute button, there is an arrow that has all the audio settings. So make sure you've selected the proper microphone, output source, and everything else.
And then you have to stop sharing, Steve, for him to share.
Yeah, let's first hear his voice.
Yeah, there's a toggle at the bottom next. Okay, there we go.
I stopped sharing, but yeah, let's first hear his voice. There is a toggle next to, there is like a drop-down menu. It has many buttons. The left button is mute and mute. Next to it, there is a little arrow. If you click on it, it has all the audio settings.
The shadow knows. Next to the mute button. I think I hear Peter now. Hi, Peter. I hear a mic.
Probably that was me.
Oh.
He says he's speaking. No, we can't hear you. Have you selected the correct microphone? Yeah, but have you checked that the correct microphone is actually selected from the little arrow next to the mute button?
Okay, how about now?
There you go.
Okay,
Hi,
that is it. Yeah, now we can hear you.
Sounds good. Okay.
All right,
and what about screen?
Now there is a green button that says share. And
screen,
yeah, perfect. Yep. Okay, enjoy the interview.
Thank you very much, Steve. Merry Christmas. Peter, nice to meet you.
Nice to meet you, Dale.
It's really a pleasure. You know, I've seen you on Twitter for quite some time. I appreciate you taking the day before the holiday, unless you would probably prefer to be here instead of in a mall.
Right yes, now. That is true.
Okay, so I did a little bit of reading your background, and you have one of the most widely followed morning profile pre-market setup for your subscribers, and people have been following you for a while doing this, and now I see what you have for profile. I'm also interested in, Peter, how first of all, the Twitter handle Shadow Trader. Why Shadow Trader? What are you shadowing here?
Just shadowing the actions of real traders. You know, it's not anything you know, like black hat or anything like that. It's just it just simply means to follow somebody. Okay. And to be able to follow their movements exactly. So, you know, we run a number of advisories on our site, all of which we trade very transparently, many of which through real-time text message, you know, so you just kind of, you can shadow and follow along, that's all.
So why don't you get in a time machine and tell us how it all happened for you, a little bit of your history that led to Shadow Trader.
Yeah, basically started following the markets when the internet bubble was expanding, kind of towards the end of it, I would say like 98, 99.
Yeah.
And then got into trading the markets actively at the right at the turn at 2000, and went through the usual few years of, you know, struggling to profitability, and started turning the corner around 05, and I think we started Shadow Trader in 06, and we've been motoring along ever since then.
Okay, so between the end of the dot-com bubble and 2005, did you have any major influences, Peter, that kind of helped you create a new paradigm for yourself from struggling to becoming more effective and more consistent? Did you have any mentors?
I did not actually. I can't really say that I had direct mentors. I think I was schooled in the School of Hard Knocks, but
oh, I know that. I went to that university.
Yeah, that university. Yeah, it's expensive.
Yeah, Ivy League. I paid an Ivy League tuition. How
Right,
about
exactly.
you?
But
I hope people only pay community college tuitions. But
exactly.
yeah.
But the important thing is that during that sort of learning period, and I highly recommend this for anyone, the most important thing is to take copious notes and just go back and pore over charts over and over and plot where you were active and where you weren't active and why. And the bottom line is that all of the education will come from all of those places in the chart where you were active, where you made a mistake, not where things went okay and you made money. You know, the learning all comes from, you know, why did I do that or why didn't I do that, which led to losses. And that's really it. And my particular evolution took a huge jump when I made the basic realization that, you know, 85 or 90% of stocks statistically follow the market. So that was the genesis of the shadow trader methodology that I developed, which is to follow market internals, namely the breadth, the advanced decline line, and the tick. Initially, it was the trend. The trend has kind of fallen out of favor because of all of the inverse ETFs have kind of thrown it off. But initially, it was those three. I've now switched to the tick. I've also added cumulative tick since then. And that essentially was where the corner was turned proverbially, because once you start to understand very clearly how market internals drive the market and tell you if the market is giving a real signal or a false signal, you have a much better chance of being in the right direction. And then some years later, I would say about, it's been at least 7 or 8 years now, I discovered the work of James Dalton in the market profile. I visited him a couple of times. He became my mentor in the profile. And since then, I've added market profile to my analysis, and that has opened the doors, you know, even wider, I think, because I'm a huge believer that it is it's an extremely important thing in terms of understanding market structure, market direction.
I never understood it, but a lot of floor traders and guys I knew from the floor watched market profiles.
Mm-hmm.
And you are now, I understand, a proponent of journaling. You have all your people that are learning from you journal because of, you know, I'm a big believer in NLP. You have to write things down to really get it. I don't know how old you are, Peter, but I used to update my charts by hand. You can never do a chart like this by hand, I don't think. So,
no, probably not. It'll take too long.
Yeah. So tell us about what you learned. We're looking at a market profile right here. I see letters and numbers, and maybe you could walk us through it that kind of tell us what kind of market messages you get from this.
Certainly. So what we're looking at here, I'll just for instance expand Friday to give you an idea. This is a market profile chart, and the way that the market profile chart differs from regular two-dimensional charts is that it adds the third element of time into the mix, and that's why you can see that the market profile chart is a lot wider than a typical candlestick, which is just has height basically and has price and volume on the bottom. The market profile chart, what it does is it marks off prices in it breaks the day up into 30-minute periods. And every time a price trades during any 30-minute period, it marks that price level with a letter. And you can see in the profile on the left, the one with the yellow box, we have capital letters. The one on the right are lowercase letters. That's an overnight profile. That's essentially the distribution of prices from Sunday night and into this morning. But the main one to deal with is the regular trading hours profile. And like I was saying, you mark each 30-minute period with a letter. And when that 30-minute period ends, you move to the next letter. And as you can see, that creates this sort of bell curve distribution of where price is traded over the course of the day. And
do the letters mean anything, Peter? Different letters?
No. Each individual letter doesn't signify anything. You can start with any letter you like. I prefer to start the profiles with the letter B. Some people start with A. It doesn't really matter. The letter, all the letter means is that the first letter is always going to be your 9:30 to 10 a.m. period. So you can see here that the lowest letter in the alphabet is obviously B. So B is 9:30 to 10. C is 10 to 10:30, and onward. Until you get to 4:15. And what the profile is essentially doing is, one of the things that James Dalton taught me that I always go back to. I have a number of a million things from him, but one of the things that he always said was that the winner in the markets will simply organize information better than the next person. And that really stuck with me, because that's essentially what the market profile is. The market profile is simply a way of organizing the market. You're organizing time and price into a certain structure. And when you have it, it gives you a lot more information, because you then see where value is as opposed to just where price is. More two-dimensional charts really only show you price, but price is misleading, where value is never misleading. The market profile shows us where value is, because it shows us where the most time was spent at particular prices, and where that is obviously is where the profile is widest, because it has the most letters that had happened over multiple 30-minute periods. And that's
what I find very admirable about this, Peter, is that you were already a pro, and you already had a lot of successful methodologies working for you, and your hunger to get better, even after many years, to take on new discipline and learn from somebody else, tells me about your personality of always trying to fine-tune something and believe that you're either growing or dying. And I'd like to commend you on, it's tough sometimes. I'm kind of like tough to teach an old dog new tricks kind of guy, but you went out there and actually, after a fairly decent period of time, said, what I have is good. How can it be better?
Absolutely. And I appreciate you saying that, because I continue to do that to this day. I'm not going to get into it, but I kind of discovered something about a week ago that I got really excited about, and I'm just tearing into a bunch of research on that, and I want to teach it to myself. And
you love what you do.
Oh, absolutely. It's a never-ending. It's the ultimate meritocracy, and it's also it's a mirror unto ourselves. I always say that when a person is staring at a bank of screens and they see a bunch of charts, they should not think they're looking at charts. They should think they're looking into a mirror.
Wow, that's a pearl. Okay. All right, go ahead, buddy.
So back to what I was saying about the profile is, like I said, the profile organizes information. And in organizing that information, we get a lot more, a better idea of where value resides as opposed to price, because price is often misleading, and prices will generally gravitate towards areas where value exists, and they will reject areas where there isn't value. When you look at this structure, not only in terms of one day, like right now on the screen, we're just looking at one day, but these structures, if they're looked at collectively, also give us tons of information when we sort of zoom the chart out and look at the structures that have built up sort of the move. So for instance, one of the things that is very important that I'll just touch upon here, I've been talking about it a lot recently, is the fact that a basic tenet of these theories and this type of analysis is that any areas that have high volume or a high amount of time that was spent, those are called points of control, where the most amount of time was spent. You can see them here in the middle. They're the widest points. Those areas should be revisited. A market that's acting properly, that's rallying, should essentially sort of take the pitch, hit the pitch, and then, the guy on first base, he should tag up, right? If it's a fly ball, you get what I'm saying? Like, you have to tag up, meaning that the market should come back to these high volume areas and test them before rallying further. When the market doesn't do that, it leaves these high volume areas untested, and we call those VPOCs, which stands for virgin points of control. So they're those points of control that have never been tested. And one of the things that is very, very apropos and important about this market, because obviously this is a huge sort of discipline, and I can't teach the whole thing in just a few minutes, but I wanted to leave the listeners with something that they could absolutely use going forward, is the fact that this market right now has an absolute record number of virgin points of control beneath us that have not been tested. This market has been rallying like no tomorrow for so long that we now have 11 of these virgin points of control untested below us. Now, to put that into perspective, on an average run-of-the-mill rally, when this VPOC number gets to 5, that really is a wake-up call to me. There is generally a liquidation break coming that will repair all those virgin points of control, come back and test them all if that number gets over 5. That number is now 11, and I don't see that repairing.
Have you ever seen 11 before? What's
No,
the highest
absolutely.
reading?
I've never seen it, Dale. Never. I've never counted 11. There are 11 virgin points of control below us from I believe from the October low, meaning the last swing low. We have 11 of these virgin points of control.
So I have a lot in common with the market, because the market may not know what to do with 11 virgins either.
That's right.
Is that true? I certainly wouldn't. So you're really getting extremes. Is there anything in market profile that would give you a hint for possibly trading the other side of the market because of this unprecedented setup?
Sure, absolutely. And I'm glad you asked that. There's two things that I look at, which are kind of two sides of the same coin. And essentially, when a rally ends properly, we call that the end of an auction. And it may not be the end of the rally totally, right? We may just fall back and come back up, but it will be at least enough that somebody could get short, meaning that there's an end to an auction. And what the market profile does is it essentially tracks the activity of the two-way auction process in the market. So I want you to think about this just like any other auction. It could be cattle, it could be cars, it could be artwork. When you have an auction, generally, and especially a type of auction like, maybe artwork is not a good example, but let's take like livestock where there's lots of it and it's all day long and there's hundreds of lots that need to go off.
Okay.
Generally, if it's going to end the right way, the prices should go up at the end in some sort of crescendo, and there should be just a few prices trading at the top, but lots of activity, but maybe not much volume, and we call that an excess high. So you can see in these profiles here, for instance, these last few days, there's no excess high. This would be a good example of an excess here. See this? So when you see a spike like this, where only one time frame, one period, that C period in this one, has the move up and then move back down, that would be an example of a potential end to an auction. Now, the other side of the coin, which is a little bit tricky, is that it could actually be the opposite, meaning that we could end on what's called a poor high. And a poor high, I'm just trying to find one. A poor high is one that has a lack of excess, which means that the top, I'm going to try to go across, the top would be very flattish like this. Like, see, this top is very flat. It only has 2 ticks here, but it can get even flatter than that. There are often poor highs where you have nothing on top. And that could easily be a setup where you would get a sizable move back, because what that implies, especially if it's at the high end of a range, is that longs have essentially painted themselves into a corner, and all the short-term traders in that session, when they got to that level, they were very fearful, and they couldn't get that capitulation move to make that burst to end the auction properly. The auction ended improperly, and they're all kind of stuck there. And the next day, those are going to be the first sellers. These poor highs are very often very, very reliable signals that you can pretty much kind of short into the close of that poor high and cover in the overnight session. And why I say that the poor high may be actually a trigger of an end to this auction is I think everybody is probably going to be waiting for that excess high, which may fool people and it may not come. And B, when the poor high comes, it will trigger selling the next day. And then that selling could get further selling, right? If we have that, just those people that are last in, first out selling after that poor high, and maybe you take out one day's low before you, which, think about it, that really hasn't even happened in a while. Like, we're not even making fresh 2-day lows. We're not even taking out prior day's lows. But let's just say we do. There is potential, obviously, in this market. We come into January. Now you have tax sellers. Maybe more sellers join the party, but only if, right? It really, you have to keep that in perspective of that lower prices can only occur in one way. How is that? More sellers than buyers, and stronger sellers need to join the party. And I'll just leave you on this note. That is one of the really beautiful things the market profile does for us, is that it leaves footprints and shows us where strong buyers versus weak buyers exist, or strong sellers versus weak sellers exist. A lot of people only look at two-dimensional charts, so they don't really understand when stronger sellers are coming into the market, or stronger buyers or weaker buyers, longer term activity versus shorter term activity. The profile shows us a lot of things about that. I will tell you, certainly from experience, I have seen no evidence in quite a while of longer term or stronger selling activity in this market. It just does not exist right now. I believe the potential is there for it to come in, but nothing right now.
All right. And what kind of time frame do you use this? Would you consider yourself a swing trader, scalper? I hear you talk about overnight trades. Do you use this for intermediate term,
yeah, it's
long-term positions?
It's most commonly used in the futures world for day trading of futures. I day trade stocks somewhat, so I will use it for that. You can put the profile on stocks, but more importantly, what I think it is just a fantastic sort of fourth or fifth market internal in your arsenal to help you with market direction and show you where key levels are in the market that you'd be using as signposts. That's one of my favorite words, is using these key levels, such as the point of control, the value, the high, the extremes of the value area, whatever. Use these as signposts in your trading, regardless of your time frame. So if I'm a swing trader and I'm long on a Monday and my target is Wednesday or Thursday, I want to know if a gap is being unfilled, or hey, look at that. We were supposed to touch the point of control. We didn't. We gapped and held. Okay, that's bullish. I'm holding my position. You see, so when these signposts are tested or not tested, it helps you really, even in the longer time frames.
Yeah, you're always taking in the new information and reassessing, right? So you teach people how to use this?
Absolutely, absolutely. I write a report every morning called the.
Why don't you show it?
Yeah, let me show it to you. It's called the Peters Pre-Market Perspective, and I'll be glad to show it to you. It's actually here. Let me just bring it up. And I have a few sample issues here on the site. I don't know if you guys can see that.
Here it is.
There it is. Okay. So this is some information about it. I do offer a 1-week free trial. If you're interested in getting this, you can sign up and you get the first 5 days on me. And if you want to see what it looks like, you just scroll down here. There's some sample issues. And I will leave you with this because it's important, is the first sample issue here. This has a list of all of the virgin points of control below us and all of the gaps below us. There's a number of unfilled gaps below us as well, and that's also important. So I just wanted to point people to that. But if you want to see a free issue or a number of free sample issues, what this looks like, that top one does have all of those VPOCs listed in it.
Okay, well, Peter, I want to thank you so much. It's really nice to meet you, and you're a real passionate guy, and I could tell by your temperament, you're a very good teacher. And thanks for giving us a little glimpse into what you do. And I find it fascinating, to know where the players are and what's going on. And always nice to have another arrow in the quill, right?
Absolutely. That's all this is. Absolutely.
And like it or not, you know what you are now? Going into Christmas is my Christmas gift to you. You're now my trading warrior brother, Peter Resnick.
Thank you, sir.
You take
Happy holidays to you.
All right. Well, everyone, the best way to follow Peter, you could go right to his website, shadowtrader.net, or on Twitter, you just go right to his name, at Peter Resnick. REZNICEK. Merry Christmas, Peter. Happy New Year. I hope pips just fall down on you like the thunderstorm we're getting in San Diego today.
All right, Dale. Thank you so much. Take care.
All right, buddy.
Bye-bye.
Good hunting. All right, everyone. That's it for the rest of the week. Merry Christmas. Tell the people you know that you love them. They're not mind readers. And don't just count your pips. Count your blessings. And see everyone again, I believe, next week. Adios. Thanks again, Peter.